You read the title, man. You read the title. I'm about to give you my strategy. This is a strategy that I use every single day in the market. And I know you're probably like, man, stop playing, bro. You about to give away your strategy for free? I am. I swear to God I am. I just want to do a good deed, man, and share something to the world that can impact the world, man. Like, a lot of people just want to take your money. I don't want to take your money. I'm making money. I don't need your money. YouTube don't pay me. I don't have a course. I don't have a Telegram chat. I don't have a Signal chat. I don't have anything. I just have me. And I'm deciding to share this to the world, man. So as much as a lot of people that have Fibonacci courses are going to hate me, as much as my sister is going to hate me for this, I'm doing this for y'all. Like, I want to see somebody else win. I want to see somebody that don't even know what the fuck going on in the market watch a video, backtest this, take this video seriously, and start making money in the next couple weeks. You know, like, I'm very, very serious, man. I want to help somebody. So take this video serious, man. Take notes, and bro, just soak up as much information as possible, man. I hope that this video can help you in any way, shape, or form. And all I'm asking for you is just like the video. Like, please like the video, man. Like, this is what I use every day. Every day. So, let's get it. You are a wonderful God. Oh, my creator. Only you are. All right, man, let's get it, bro. Let's get it. Before I even show you this, I gotta pull it out first. So this is how my Fibonacci strategy looks. So, all right, so let me explain every single fib level. So let's start at the top. It's 100%. This is your stop loss. This fib level is used for a stop loss. Also, if your Fibonacci breaks this, the Fibonacci is invalid and it's the trend is changing. Okay, let's just let that be known. Now, sometimes, I'm not gonna lie to you, sometimes the market know where your stop loss is at, right? So they will wick all the way to the 100% fib level and then go in your direction. So it's up to you if you want to use this as your stop loss or you want to have it slightly above it. I just have it right here because, like I said, I got a good risk to reward. So it's up to you. It's up to you. I'm just telling you exactly how I use it. The 70%. This is where I enter the trade. I do not enter off the 61.8. I don't enter off the 62% or the 60%. I only enter off the 70%. You will have sniper entries. I am not playing with you. Listen to me, listen to me. You will have sniper entries. I'm not playing. As soon as it touches this, it might wake up a little bit and then you're automatically in profit. That's why I keep telling you Fibonacci is the key. 70%, barely any drawdown. And it might come up here a little bit, but give it maybe 2 to 3 candles and it's gonna be right below it. So 70%, that's my entry. Soon as price touch the 70, I'm in. I don't even wait till the candle close. I enter, okay? I enter. 38.2%. This is probably the most important fib level on the Fibonacci because price always bounces from this fib level. Whether you waiting for the pullback and it come, hold on, let me see. Okay, so price is like coming up here and then it bounce from it. And then it come up here. Once it bounces from the 38.2, first, you know your Fibonacci is good. Like, you have it placed perfectly because it bounces off of this first. So once it bounces off the 38.2, it might come back down a little bit. It can retrace anywhere down back here, and then it'll come all the way up here, then come back down to the 38, and then it will bounce back up. I'm not gonna lie, it will bounce from this. Like once it comes to your entry, it will come back down to 38 and it will bounce from this. It might make a wick a little bit from off the 38, then it come up, and then once it come up, it depends. It might come up a little bit higher, and then it would drop down to, you know what I'm saying, whatever fill level or past it. But listen to me, bro. 38.2 is the most important, and the 38.2 is my first TP. Okay, first TP. And I know you're probably like, damn, that's a close TP. But look at this. Look at this. You have a slightly above 1-to-1. Okay, slightly above 1-to-1. Scalpers, this is good. Okay, this is good. I know people say, oh, have 1-to-2, but you're not gonna always get a 1-to-2 risk to reward. That is a myth. You're not gonna always get a 1-to-2. So Fibonacci, you take some profit off. You take 50% off. You take 25% off, 75% off, however you want to do it. And then as price come down here, it's going to reject it, bro. If it break through this, then you literally trade news or something. I don't know, but it's gonna bounce off of this. It's gonna come up, then it's gonna tank down, and then whatever. But most of the time, I'm gonna be honest, most of the time, when it bounces off of this, it maybe come down here, and then it'll go up. So don't expect for it to come all the way down here. And sometimes, I'm not gonna lie, even when you are wrong, listen to me. Even when you are wrong and you put your fib wrong, it will still sometimes come to 38 and then go up, okay? So you can be wrong sometimes. But as long as you got that first TP touch, sometimes you might have to close your whole entire position. Just depending on how the market is moving. So the 38.2% is gonna have you get a high win rate. I'm telling you, I'm dropping you golden nuggets right now. I know my sister probably like, man, what are you doing? But I don't care. I'm just giving away for free. I don't care. So 38.2 is a perfect good TP. Yeah, just know that this fib level is probably the most important. Now, before you ask, why don't you enter up to 62% or 61.8? That's just how I trade. And with my Fibonacci strategy, you are going to miss setups. You have to be okay with that. You have to be like, damn, I just missed a setup today. But I recommend having maybe 3 pairs minimum, because you're going to miss setups, because sometimes price won't even touch the 70. It will go to the 61.8 and then tank. So that's just not my setup. Like, this is how I trade. This is how I have a good risk to reward. This is how I grow my account. And this is how I take losses and be okay and make the money back the next day without tripping. You know what I'm saying? Because if you got the 61.8, which is going to be somewhere down here, once price go against you and your stop loss up here, you just lost more money. But then you took a couple wins taking this, but you just lost it in the day. So just listen to me, man. 1-to-1 risk to reward, perfect. Close partial, let it run. It's simple, bro. You don't even gotta think about it. Once it touches 38, move your last position to break even and just walk away from the charts and just see what happens. You never know, man. This might be a big runner. You never know. Okay, so I explained the 100%, which is stop loss, and once it break it, the trend is changed. 70% is my entry. 38.2 is my first TP, and price usually bounces off of this, coming up and coming down. This is just a key fib level. And let's go to the TPs. Okay, let's go to the TPs. This is TP2. This is 25%. It's just a TP. I ain't gonna lie, it's not really nothing special. This is not nothing special either. Now the 10% fib level. This is almost 1-to-2. I feel like I got it wrong, man. This is really 1-to-2. Hold on. this is definitely 1 to 2, bro. I backtest this already, so. Okay, whatever. This is 1 to 2, okay? This is 1 to 2, and when you close half at 1 to 1, your next TP should be the 10%. Now hear me out. This will not get touched often. It won't. I'm just letting you know, don't be discouraged when it don't get touched. It will not get touched as often. Your market has to be in a strong trend for this to get touched. And if it touched this, it's really in a strong trend. Or it might just wick to the 0% and then go back up. So, and the same thing applies for a buy. Literally the same thing applies for the buy. Same thing. Stop loss. If price break this and keep going, trend exchange, entry, price bounces off of this, TP, TP, TP. Very simple, bro. Okay, so now since we got all that out the way, let's see this on some charts, bro. I got dollar Swiss right here, and these are the 4 pairs that I trade now. I needed 4 pairs because, like I said, price will not touch this 70 all the time. You got to be okay with it, man. You got to be okay to just chalk up the missed opportunity because it's just not the setup. Because if you lose, you're gonna lose more money than the win. So we need it to be leveled out. Now, as you can see, I have 2 indicators on. I have 3 moving averages, and I have something called a fib point. Okay, you can go on TradingView and put Fibonacci, type in Fibonacci, and it should say something like MMP, something like that. But these are fib levels, right? Fib levels. Matter of fact, I'm gonna just show you. Major, minor fib points, okay, by bench CH, okay? This is very important, bro, because for people that really don't understand higher highs and higher lows, you can spot these things like that. It's not even a question if you got it wrong or right. And this is what I use. Even though I can take these off and clearly see where market structure break and where it's making a newer low or a newer high. But if you got this on, you don't even have to question it. Now, as you can see, at this point, this is the highest point before it broke structure. So let's just where is my, okay. So at this point, it broke structure. As it breaks structure, you wait for it to pull back to our entry. So you will run your fib from the top of that point to the bottom, which I have this line right here. It came up, did not touch your entry. Do you hop in? No, you do not. I don't care what happens, you do not. You wait till it touch your entry. It came back down to the 38, almost touched TP2, did not, came back up. What did it do? 2 candles and you're in profit, okay? It did not touch your first TP. You do not exit early. You let it run. First TP, close half, 25%, 75%, whatever you do. And you move it to break even. It touched TP 2 and 3. So now you got a 1 to 2. Golden, okay? Golden, bro. Let's continue. We have another one. Like, now these are setups that just happen throughout the day. This is not even New York session. So this is just the power of Fibonacci. This is what the market moves as. I keep trying to tell y'all the market is Fibonacci, but they don't tell you that. So boom. You see all these little fib points. You start it from right here, and you see where structure is being broken, which is right here. Okay, matter of fact, so I want y'all to really understand this so y'all can kill it in the markets, but you have to practice this. This is not, you're not going to get this overnight. Okay, so the market went past this low right here. It even have a fib point on it. Usually you'll know when price passes another fib point, it's market structure break. So it went past it, came back up, touched the 70. You see how you in barely any drawdown. It blew past the 38. Now, like I said, if it blow past the 38, you are in a strong trend. It blew past it. You better let that boy run. You better close with maybe one position and you let that boy run. Okay, you close stop loss to break even, and as it's moving down, like as it touched the 0%, I'm moving my stop to the 25 fib level. You keep moving down, it created another fib, like they go another fib, but we ain't even gonna, you feel me? We ain't even gonna do it. No matter of fact, we is create another fib. Now I'm not saying get greedy and stack orders. I just want to show you that, man, like the market is Fibonacci. I keep trying to tell you. Another Fibonacci. Boom, you could have added to it, but we're not greedy. You feel me? We're not greedy at all. So yeah, you let this boy run. These are the runners that you leave, and you just wake up the next day or whatever, or you have a certain TP and you just take it. But this is a beautiful play right here. Let's continue. Let's continue, man. Let's continue. Right here, go another one. Okay, you might get confused because there's a high right here, a high right here, and you probably like, how is this market structure break? Listen, man, you have to look at the current market. Don't just look all the way back here and like, oh, it didn't break this high. This is not market structure break. It is, because it broke this current high. The market is always changing. Don't just always look at all the way in the past and be like, well, price need to break this point and go past this point and then come down. Bro, it's not gonna do that all the time. It's just not. Okay, it's not. So let's look at this. So price broke this high right here, right? So once it break it, you wait for the retracement. You see the fib level showed up. You pull your fib out and you leave it right there. You leave it right there, okay? Because it's gonna be at this point you can't see this part, so it's gonna be up here. You're gonna wait. It touches this. It touched the 38. Now you see how it bounced off the 38. I'm telling you, the 38 is very important. It literally touched the 38, made a little wick. You would have closed some positions right there. Okay, you would have closed some positions and stop loss break even. Boom, it's gonna be right here. You don't lose anything. Either you want to take it to the 1 or 2, or you just want to let it run and see what happens. It's up to you, man. Either way, you're in a risk-free trade, beautiful trade. I'm telling you, I'm giving you free game. Like, please thank me for this video. Like, as much as I know people are going to be mad at me that have courses that's based off Fibonacci, I don't care. So, bro, if you enjoying this video, please give me a like, man. Like, just give me a like. That's all I'm asking for, because I'm telling you, like, I know my sister gonna kill me for this. I know she is, because we went through so much to understand this shit, and it's so simple, and I'm just giving it away for free. But anyway, let's see another one. Something that I would take. Like, I'm showing you something that I would take. All Fibonacci are not good, okay? Like something like this, like, you lost. Why did you lose? We have got like a triple top right here. No, it's because it wicked past it. Don't mean it's market structure break, man. Like I said, all of them is not good. This is not good. It's been moving up for a while. You think a retracement not about to come? Come on. You think it's gonna keep just going up? No, it's not gonna keep going up. So you got to be careful. You can't, first of all, this is not a 100% win strategy, okay? Let's let that be known right now. But you have to be cautious of what has the market done for the last fucking few hours. Oh, it's been pushing up for a while. You think it's going to keep pushing up? That's unrealistic, man. It's unrealistic. Okay, let's try to find something. like that setup. I don't like this setup either. Okay, we got one right here, right here. All right, so this is a very clean setup, very clean, very simple, and you can make a lot of money off of this shit. So, boom, that's one high. That's two highs, okay? Price went past both of these levels, okay? Now, this is a very strong move up. So, as it moves up, you point to point. It's not rocket science, guys. It's not rocket science. Point to point, we broke this structure and this structure. So we push it up. It comes all the way down, touches the 70. You're literally in barely any drawdown, and it blow passes the 38 and the 25%. You close some position, break even. You let it run to whichever fib level you want. You want to run to 25, to 10, or to 0. And as you see, once it went a little bit past 0, it came back down and it did a lot of bullshit, and then it ran back up again. But this is all I got, y'all. This is all I got. See where it passed the high, pull your fib out, enter off the 70. You know how to manage the trade. Stop loss at the 100% or a little bit below, but I like it at the 100% because it's 1-to-1. So I don't really think about the win. I think about what I can lose. So I have my stop loss tight because I believe in fibs wholeheartedly. And yeah, as a matter of fact, I do have this fib pulled wrong because that wick is up there. So it's really right here, but it still applies. You still got, damn, you even got the best exit for the 100%. But yeah, man, like market structure break is breaking these highs, pull back, enter when the candle is live. Don't wait till it close, okay? Don't wait till it close, because some days you're gonna have candles where it will wick to the 38 and the same candle it go right back up, and once it closed, it don't come back, it just keep going. So don't miss out. I know it's kind of scary that okay, first of all, I got these candles gray and white for my psychology, so I can let these candles not affect my judgment and just trade what I see. So I kind of like that. It just makes me just a little bit more disciplined and more patient, and my anxiety don't be all over the place. So yeah, you see this big red candle. I know your candle's probably red and blue. Your big red candle come down, you just like, man, I'm getting in right now. Like, oh my God, like, this is uncomfortable. Listen to me. When you enter a trade and you feel safe about it, those are trades that you have a high chance of losing. I'm so serious, man. I know it's backwards, but hear me out. When you enter trades that make you uncomfortable, those are the ones that mostly win. And I know that sounds crazy, but it's just how the market is. People take safe trades when you like, oh yeah, this is definitely going down, and then the market fucks you over. And this is a perfect example right here. I'm glad this is an example. So right here, we got an engulfing bearish candle right here. These two candles right here, engulfing bearish candles. These two. This is the bull candle. This is the bear candle. You entered when it closed, right? Look what the market did. It wicked up, stopped you out, because you know people have their stop loss right here. Wicked up, stopped you out, and then went down. That's what the market always do. They know that people trade engulfing candles. It's a common pattern. But you missing so many pips when you enter off the close of the candle. You're playing this safe, bro. Enter when the candle is open. When the timer is on, enter. Bro, you gonna thank me later. That's all I got, y'all. That's all I got. I'm spilling a lot of beans, man. I'm spilling a lot of beans, bro. I know my sister watches this video. She gonna be like, bro, did you really just give away our strategy for free? I did. So I'm sorry, but I'm for the people, and I'm not selfish like these other people. So back test this stuff. Back test it, add these 2 indicators, fib points, moving averages. Oh, my bad, the moving averages. Moving averages. The green is the 200 EMA. The little pink, like, I don't know, like the maroon pink EMA is the 50 SMA. And the blue is the 14 EMA. Okay, so hope I helped y'all, man. Go kill it, bro. Go kill it. Go back test this. And when you become a successful trader, you come back to this video and you thank me. I'm not even playing. You come thank me, because people is not giving this shit away for free. Like I don't even want to name nobody course that's based off of this, but most of them Instagram gurus are paying you for this, and I gave it away to you for free. That's all I got. Thank you for watching the video all the way through. Take notes, take it very serious. And I'll see you on the other side, man, when we quit our job together. So that's all I got. Peace.